Hey everyone.
Hey, Haley.
Hey, good to hear you.
Man, preparing for a kid is next level. That's what I'm gonna say. Never been so busy in my life.
Need another one. Might as well get it all over with.
That is true. I'm trying to go for like two for two, and it's like we'll see. We'll see how the first one comes out. Have have people invested in the market yet?
Dipping the toes in.
That's the perfect answer. Dipping your toes. Man, I was reading the news at first and just prepping for that presentation. I was like, now there's some kind of toll on the Strait of Hormuz. I'm like, Lordy, this truce a few days ago, and now there's a toll, and this is all sorts of interesting news articles. It definitely grabs my attention.
Just FYI on IBD Live yesterday. LA Quorum and the Harold Morris, they both bought TQQQ.
Really, I
Yeah.
thought if I rem- if I'm in another group, and that group told me that swing traders actually didn't get any leverage positions at all, but some of the portfolio managers looks like they're actually getting positions in TQQQ, which is quite interesting. We got a good group tonight. Looks like David and Peter both hear sounds now. So we're about at the 1 minute past the top of the hour. I'm just gonna go ahead and get started because there's a lot of always disclosures. So welcome to Meetup. Welcome to Legs. Thank you for coming. Thank you for being here. Let's learn some stocks. Disclaimer: this presentation is provided solely for educational and informational purposes and should not be considered investment advice and endorsement or a recommendation to buy, sell, or hold any security. I'm participating as a volunteer and not receiving any compensation for this presentation, nor is the guest speaker receiving any compensation. All investing involves risks, including the potential for significant financial loss. Viewers are encouraged to perform their own due diligence, evaluate the personal financial circumstances, and consult with a qualified professional before making any investment decisions. Neither I nor any affiliate individuals assume responsibility or liability for actions taken based on the information presented here. Why listen to me? It's because I'm young, I'm good looking. But besides that, I've been investing in stocks for 20 years. The first ever stocks was in JDS Uniphase. Welcome, Floyd. Glad to see you. You made it this time around your work schedule. Some of my notable wins. It's a little bit less than 7,000% right now because of volatility in the market. But one of my great joys is just making sure all of us are together and just sharing knowledge with each other and just kind of coming together as a group. It might look like I made more money. I haven't. It's just I am in an interest bearing account and I make a little bit of alpha. So that line's not exactly straight. It's a little bit curved up, but I'm up 50% and 57% in the last year. I still haven't invested. I'm actually considering a 60-day hold because if my son comes in 3 weeks and I'm still trying to find a night nanny, that is a perfect life scenario of just pause for a moment. Stocks will come back. Yes, it might be a repeat of 2025, but we shall see. And we'll compare those two charts. So here's the 8 topics we're going to go through today. But the most interesting one is going to be the guest speaker. I know you guys love to hear my voice, but sometimes it's nice to hear another voice. So Yogesh was very gracious to spend his time making presentation. It won't be recorded, just like in the email, and he'll go over TQQ trading and some of the AI prompting that he uses to refine his options trade. If you remember, Yogesh lightly talked about how he found out more taxes through AI prompting, and I was like, oh, maybe I should change a strategy here and there. So I'm very much looking forward to that today. But first off, let's look at the general market. So I updated this data in the wee hours in the morning, as in 6 a.m., right? The last follow through day was yesterday. So when Larry told me that he dipped his toes in the market, I was like, perfect. That's what we should be doing. We should be saying, hey, it doesn't matter what the news are saying. Doesn't matter that there's a tax on Australia Hormuz. We are technical traders, we're technical traders, and technical tells us the timing of the market. So we need to dip our toes in to help change our psychological mindset to make sure that when the stock market gets going, we go along with it. We're not sitting at the shore looking at the boat sail away. No distribution days. That's great to hear because today was an update. Woo is green, MMTS is green. Surprisingly, Roble is still yellow, but I'm pretty darn sure he's green now because he last updated was on Sunday and Monday, Tuesday. And as the week has went on, and just in 3 days, everything changed, right? We look at once we look at the stocks right over here, you can kind of see this on the weekly chart. All of a sudden, it just comes up above both the 50-day and the 200-day, or the 10-week and the 40-week, and just absolutely shot up. Yes, it's on lighter volume that you see right over here, but we still have some finagling to do, because this is a bloodbath that we saw here. Have you seen so many red pillars in a row and just having one small week of blue? I haven't seen that in a while. Even when we go back all the way to maybe 2022, that's when it happened, and that was tough when interest rates went up. Same with the S&P 500. We take a look. It's actually shooting above the 50-day moving average and the 40-week moving average. Same sea of red, but we're seeing lighter volume, especially this week. So we can't ignore this one that's right over here. How's Russell doing? Russell, same story, where price action's above the moving averages and it's looking pretty darn good at the moment. So one thing I want to do right here is to, let's see if I can switch my screens. Let's compare NASDAQ in 2025 to 2026. I was talking to Gary Taylor, right? He mentioned like a month or two ago. I was like, hey, won't it be kind of interesting if we repeat of last year, where NASDAQ, boom, boom. Let's see if I can do a comparison chart. Anyone know what's the best way to compare indexes on Market Surge?
I think it's the plus. I think you do a plus near the comp.
Plus near the comp.
Yeah, right there. Does that do it?
This X?
Oh, no. Okay. I thought that's where it was.
I don't think their comparison tool is working real well in the market surge beta, but I think it still works in the old market surge. I think I'm not sure. I've only played around a little bit, and it looked like you can only pull up two different. If you got the old one, that's the better way to go.
Yeah, I've been trying to love the new one, but it's a little bit difficult. Some of my indicators, like the daily market averages,
That's still a work in progress for sure.
still a work in
Although
progress,
it's-
where I'm seeing the advanced decline. I haven't talked about it much, but it's been a declining market, and advanced declines agrees. So the trend is down. So let's compare 2026 to 2025. Oh, you know what? Give me a sec. Let's do this.
Yeah, I'm not sure that you can compare two different date spans.
I just got a great idea. Hopefully this is great. You guys all get to see my email. So, Macallan Financial Publications, right? It was actually published 2 hours ago, and I was looking at this. So this is great. I don't need to compare. Let's just look at this one. And I'm going to zoom in, because why not? So we take beautiful. So we take a look at kind of 2025 versus 2026, right? This is March 30th, 2026. We kind of hit a bottom. And what McKellen did was that, the son of the McKellans, was that he adjusted the chart a little bit to go back a little bit. So as you can see, there was an initial bottom in April 9th, 2025. And there was a bottom. So far, we have a bottom March 30th, 2026. And we've just been roaring back in. You guessed it, right? A V-shaped recovery. Who knows that we get so many V-shaped recoveries lately? So, and that's what it's kind of like. There's a certain rhyme that's going on in 2025 and 2026. Will we get this crazy, what I say, crazy run up in the rest of 2026? Maybe. Or will we see another slight dip, that this is the bottom over here, or maybe this is the bottom over here? Who knows? But just be on the lookout, because it might be rhyming with just last year, because it does look eerily similar. Why does this happen? I don't know, but just something to look out for.
So what you just showed is known as analog, and you can find it across different charts. So people use it. It's just for educational thing. It really doesn't hold true all the time, but you can go back and check it with multiple periods in time in the history.
Yes, like I think there's a guy named Larry Williams that he does charting by like decades. I like reading his publications, and he does like certain presidential year elections, midterm elections, and stuff like that, and he compares to how things will do.
Yeah.
So he's an interesting guy in what Yogesh said, and it's an analog to see how roughly things will go. And he always likes saying, I write in my cabin, and I do this even before the year is over for the next year, and look how well it matches the next year. And he goes to his cabin to think. So the next one is going to be Well, since we're already on market surge, let's just go through my watch list, right? It's probably gonna be very similar. We've been seeing on yesterday on oops, sorry. I'm gonna double check to make sure you can see my screen correctly. Beautiful. So we see that Corning Glassware, they had a massive price action right over here. It goes up, went right past the cup. It's doing fantastic. We can take a look at Marble. I'm doing daily charts today because there was a follow through day yesterday, so we get to see kind of like the dirty details right now, especially since this is such a recent history. Same over here, volume 50%, price goes above, but it actually broke out a few days before, right over here at 134% at Marble. Let's look at Seagate. Yes, it was a few days ago. It didn't look that great. Yes, it closed down. But guess what? This is the one we're going to look at weekly charts. Hey, that looks not bad. We'll see how volume does in the past few days. Yes, I am only talking about technicals right now, but fundamentals, these are doing just fantastic. Teradyne, back to the daily. We have a blue dot in the weekly chart. We look at the follow through day yesterday, 59% went above 344. Can say this is well, it's not a double bottom, but it's wedging up and it's doing fantastic. AST SpaceMobile is doing huge amount of sales. It's trying to do the cellular space broadband. Starlink's doing it. It might be a name that's to watch. Same thing with EchoStar, satellite broadband hasn't broken out yet, but it might be forming a little handle right over there. Our favorite one, has anyone bought this yet? Sandisk. I got so many freaking alerts for this guy when it broke out. It's going because it pretty much broke back previous resistance at 700, 725, 775. Just doing absolutely phenomenal. Yes, we could argue that volume's not there, but hey, volume's a little dirty.
Yeah, lawyer, I'm still selling bull puts on Sandisk. I probably have done 14 or 15 this year so far. It's an animal. It's an animal. It only knows how to go up.
It's absolutely crazy. Thank you for sending that email, Floyd. By the way, I didn't see it until a few weeks later, and then I realized it was mute. Because I wanted to send that to the group. I was like, oh, that's a perfect example for people who want to learn more about how you're trading options, especially zero DTE. VRT, Vertiv Holdings. I'm becoming a broken record now. Follow through day, broke out, keeps going up. Drilling, gas, energy, crude went down. I saw finally Costco prices are down to like $5.25 today. I was like, yes. And I just paid $5.75 the other day. Yes, I'm in California. So gas is a little expensive here.
We only pay $1.25 up here in Alaska.
Wait, what?
$1.25?
It's a joke.
Like you're drilling the oil. You're drilling the oil and you're getting oil cheaper. What?
April Fools.
That's a good one.
But we are making I don't know what the number is. We're making $2 or $3 million a day extra for our state treasury with the current high oil prices, and so the guys in Juneau are about ready to go crazy because when they see that coming in, they say, "How can we spend that?"
They spent that. Money is always easy to spend. Let's go into some of the biotechs now. So ROIB, we take a look. It's what? It's a screamer. Goes up, it's forming a base. There's some interesting things that they're making that's coming out. I hear some praise. I always like saying that out loud. It says, Floyd, Kunal loves your TQQ strategy. So thank you for bringing it to the world. We can
Thank
say
you.
you started the TQQ strategy because you're definitely one of the earlier ones that actually had a system behind it instead of buy it. Biotech, if you guys don't want to just buy any singular biotech, it's definitely rearing up. It's definitely been consolidating for a few years. So maybe so. And you guys have probably seen many of these stocks on my list that I've been watching. 33, hit up today. This morning took a little bit of a hit. I can't believe this one took a hit, but hey, it's an outside bar, but I really don't like that it closed on the outside bar. So that's a little bit more negative to me, especially on a follow through day. And especially on a day like today, where when we look at the NASDAQ composite, it's doing pretty darn good. Because I always look at that day, what the indexes close at, the bottom, the top, the middle, where to go. And a day like today, where it closed at the absolute top, everyone should be screaming upwards because it's a pretty broad market. If we look at all the daily charts, S&P, whoops, let me go to Russell. I know I skipped that. So that's why I really like seeing just bars keep going up, something that's following the market. Cool. So I know I went through a few. Is there any stocks that you guys want me to kind of look at even more?
Check FIGS, FIGS.
Sales. Ooh, they're making money. Do I have the FIGS advertising still here? I live by billboards. What interests you in this, Yogesh, for FIGS?
It's following Wyckoff. I'm not sure how many of you know the Wyckoff methodology. It's pretty difficult to understand if you're not, if you, like, it's not a technical analysis. It talks about demand and supply. So if you make this a weekly chart, it's a lot easier to explain that way.
For
Okay.
those of us who don't understand Wyckoff, which includes me, what's the easiest way to explain what's happening?
So yeah, that's why. Can you make this weekly chart so I can explain
Oh,
it a little
yes.
bit better?
I missed that part. My apologies.
So as you can see from the left-hand side, it was dropping, like really badly. And then once it found the bottom, right, I'm not looking at any specific price point. It finds the bottom and then it starts its way up. What happens is in Wyckoff, they try to understand where the accumulation zone is. And in this case, you can see, can you move your mouse to the little bit left? You see that red, big, giant volume bar on the left-hand side?
This one?
Yep, that one, correct. So until that point, there were a lot of sellers in the market. So everything was like, every rally was getting sold for this stock. And most likely the fundamentals were not good either at that point. But after that point, something changed because you can see every rally was getting absorbed. There was not much of a downside left into it. So there were no more sellers. So in terms of Wyckoff, the way they talk about is not in terms of retailers, they talk about market makers. So somebody who is making sure that, he will find someone to buy the shares that he has, something like that. That is a difficult concept to understand because you have to become more like a broker or an institution versus a retailer. So it's a little bit different way to look at it. But essentially, if you look from that point onwards, the price tries to find a floor, and that is where the institutions will come in and start accumulating the position. And then if you go into details, you'll see many more blue bars, and the red bars will kind of go down. And that's where the accumulation is happening. And then once the accumulation is done, usually that whole trend takes anywhere between 6 months to 18 months, or sometimes even 2 years or 3 years, because since you are doing it over multi-months, institutions are not buying 100 shares, they are buying 100 million. They cannot buy it in a day or in a week. So they have to spread it out over multi-months or multi-weeks. And then once their position is allocated, then after that, the rally kind of actually starts happening. Before that, the institutions will not even allow the rally to go forward. So there's a lot of blocking that happens. So I won't go into detail because Wyckoff is a very big topic, but essentially there's something called spring action. So if you see, especially the one, yes, that is where the price starts moving higher and it rapidly goes towards the upper part of the channel. And then it kind of stagnates over there. And once it breaks out from there, that is where you want to get in. Because then usually the stock will do 50 to 100% or even 200, 300% from that point on.
Yeah.
Because the institutions have already accumulated their capital. They already did their analysis. And now it can go for a month, for a year, 2 year, 3 year. It all depends on the earnings and all the future things that are coming for the company. So as you can see here, the EPS growth, sales growth is awesome. And the stock has started moving higher. And from current level, it has potential to go to 23 and then probably to 40 or something like that.
I just want to take a look at the monthly chart from here. Oh my lord. I remember when I IPO'd, I was an institutional darling. And it just got slapped. Like all the doctors, all the hospitals were wearing it.
So something to keep an eye on.
Thank you, Yogesh. Any other stocks that people want to take a look at? While people are pondering, let's take a look at some of the higher volume stocks that are happening today.
Can I ask a question if you don't mind? Sorry.
I welcome it.
Yeah, hi, this is, I think, this is a Yogesh, thanks for bringing it up. I was wondering if at some one of the sessions you don't mind doing a high level overview about the Wyckoff, because I haven't studied it in the past, but in a chart like what you were seeing previously, uh, it's I find it hard to identify what are the various phases, the phase A, B, C, D, etc. in the Wyckoff, which is the immediate reaction and so on, especially in a chart like this. In a nice range chart, I'm able to, but anyway, if you could give a little bit of education on that, that would be fantastic.
I wish I could. The problem is that technique is very, very difficult to understand because it is not like technical analysis where, hey, has it crossed 50-day moving average, or has it crossed 200-day moving average, or is this the resistance, or is this the support? It is combination of many things: support, resistance, it's combination of volume. So you need to understand to see how accumulation happens, or where you can see it. The very easy way that I do it is essentially I look for a very wide range. Typically, the stock has to be within 25% of its all-time low to see that. And then once it starts doing that, for example, recently, Nike was one of that stock that I was looking at, which was going through the similar pattern, but it could not hold the support. And not only that, the EPS growth, sales growth are not really great for Nike. So it kind of broke down badly. And it just, but most likely it will form a new base over there. So in this particular chart, the way I look at it is once you see that climactic selling, how do we know the climactic selling is based on the volume bar? It's very, very evident. You can see a very high volume bar. That is kind of a climactic selling. Now, that doesn't mean that price cannot go below that price point. It will certainly try to do that because that is where institutions are accumulating. So they want other people, whoever is holding, to kind of panic and throw the towel. That's the idea. So that's why you can see the price goes down but quickly recovers, goes down but quickly recovers. So what is happening is the institutions are buying in, and that is where you will start seeing those blue bars accumulating after that point. And that is kind of a signature that, okay, institutions are accumulating. So the idea is not to get in at the bottom, which is the retail mentality that I want to get at, like at the pennies. I want to get at the last bottom point on that chart. No, that is a very wrong way of looking at it, because you don't know where the bottom is. It's always in the hindsight. It's always in the rear view mirror, right? So you don't want to get at the bottom. You want to get at a point where there is some sustenance to the rally, which is on the right hand side. You can see here, it comes back up, it takes out that initial resistance around 6, and then that is where it stagnates. That would be the ideal point to get in, so that if it breaks down, then you can take a small loss and get out. See, institutions can wait and they can do a lot of research. They have a lot of capital, plus it's not their own money. You are trading with your own money. So you can simply get out with a small loss and get back in again when the stock comes back. Institutions kind of wait on it for 2 years, 3 years. They have plenty of time to do the research. So the easy way to look at these charts, I also use OBV, on balance volume, which is again a volume indicator. So that is also very easy. You can just put that one and you can easily see that kind of starts moving higher. That's another way to look at it. One more way to look at it is if you do a relative strength with respect to SPY, you will also see that one starts moving higher. So those are some of the clues that, okay, this stock is kind of done accumulating by the institutions and now it starts moving higher. And to add to your conviction, you can look at EPS growth and sales growth. And if they are also matching it, then you can say, hey, you know what, there is some potential. And this now the hard part is, okay, how do I know that this is going to double from here or triple from here? Now there's a separate topic in Wyckoff called PNF analysis, which is point and figure charting. Very rarely I've seen people understand how to do that. That is again a difficult topic to explain. You have to understand the calculations, and it is kind of a rigorous method. There is no easy way out of it. And that is the only method I have seen which kind of gives you a very realistic price projections, but it does not tell you the time frame. So it won't tell you in next week or next month or next year, but it will tell you that, okay, based on this base, the price should go somewhere here in the future. And that is, if you know how to do it, that's great. If you cannot do it, one of the easiest way that I do it is simply draw a channel connecting the top from here on the left hand side and the bottom. So that kind of a range, put a perpendicular line to it, and then simply extend that line on the other side, and you will know kind of where the price will go. That is just an approximation. The PNF chart actually gives you very real price projections. It's also a difficult topic to understand. A lot of material about this is on stockcharts.com, and you can read through that. There are books out there. I've tried a lot of different books and I've read through all of it. There is no easy material out of it, and you don't want to go for an easy material because then you kind of don't understand what exactly is happening.
I believe there is a Wyckoff Institute that runs tuitions. They run classes on this. But anyway,
Yeah.
I'm sorry, I didn't mean to take up too much time.
Hey,
So
this
if
is-
anybody is interested in Wyckoff, as what you mentioned, right? Wyckoff Institute, they have a Twitter handle. Whenever they start a new WDC, that's what they call it. The first session is free. So I would encourage everyone to join that first session. It's like a 2 to 3 hour session. They start with market analysis, and then they actually go into how they do the Wyckoff. Very high level, but it's a very good one to start with.
Hey, this is Floyd here. I appreciate you guys having this discussion because you've just convinced me that I don't want to know how to do it.
I can imagine that. Yeah, Floyd.
As Clint Eastwood said, a man has to know his limitations.
Good one.
I think this is the Wyckoff Twitter handle. It's Wyckoff Analytics.
Yep, that is correct. And they used to put out Wyckoff quiz charts every Friday. I don't know they do it even now, but if you get a chance, go through them. That's fantastic.
They get a follow from me too. Thank you, Yogesh. Thank you, Watson, for asking. Thank you, Larry, for the actual link for Wyckoff Analytics. And I also sent a chart for the phase A, B, C, D, E, so we can just kind of know like what the heck is all these alphabets that I'm relearning. Is this kindergarten? No, it's Wyckoff. So we have a request from Kunal, CLS. Let's see, Celestica. So Canadian contract manufacturer of electronic products for healthcare, industrial, aerospace, and defense. What I see right now is a stage 2 base. I'm seeing annual earnings growth. It's going from 1 in 2022 is 1, 2, 3, 6, 8, 12 to estimated in 2027. Double-digit sales, double-digit earnings. The stage 2 consolidation. I'm going to double check this. This is really stage 2. I guess so. I would say this looks like more of a stage 3 to me than a stage 2. I don't fully agree because of this run up from 2022, but that's an art. There's a trend line that's going. It's definitely, let's see how the volume is here. It's definitely drying up on the bottom. That's right over here. It's definitely coming on up. It has the big news that's going for it because aerospace defense, there's multiple wars going on inside the world. Ukraine, Russia, Iran, Israel, Palestine. The US is also in a war right now, if I can say that. Too much time in San Francisco. Don't know what to say anymore. So it's a stock to watch. I like it. Good all. How'd you find this on your watch list?
I came across it on Twitter.
Twitter. That means I should go Wyckoff on Twitter and find Celestia on Twitter. Add this to the leg stocks. Oops, not KLAC. Is it KLAC that you're asking for? Gotham? I'm gonna
KLA, yeah. KLA, forget the actual
It's KLAC.
KLAC.
my fingers typed it before I even knew I typed it. Does that mean I look at stocks too much? I just don't buy anything. So let's take a look at the weekly, right? In 2020 it's $10, 2021 14, 21, 25, 2024 went down to 23, 33, 36, 47. And the manufacturer process control and yield management for integrated circuits and nanoelectronics with LED and data storage. So semiconductor equipment, just like the industry. We see the weekly chart is doing quite well. So on the follow through day, there was a huge gap up at about 7.97%. Volume was negative 6%. I'm just going to remind myself, I already forgot. What was the volume on the follow through day? So on the NASDAQ, volume was about 16% greater. So just for me, I like relative volume, right? Comparing the volume on the Nasdaq, comparing the volume on the S&P 500. S&P 500 was about 1% higher. So if we look at KLAC, even though it went up about 8%, and it was broad spectrum, the volume wasn't really concentrated. Not as much people, I would say, is buying. I know I've said volume is dirty, but I still like volume as a relative reference point. If we look at the weekly chart, it is probably going to run short because there's only one trading day tomorrow, and where the volume is about 2.9 million currently, and the average volume is 4.7. So that's like 2 trading days worth of volume. Unless it rockets tomorrow, it probably won't beat volume, but hey, price is king. Blue Dot, great industry. Semiconductors doing great. Nice pick.
Listen, Floyd, since this is the legs meeting, SOXL is up almost 25% in 2 days. SOXL has just been on fire, and we got a very, very clear buy signal. And it's a fun one to own. But yesterday it was up 18%, and I think today 5% more, maybe even 6% more. So like 25% in 2 days. And look at that massive gap up, and there's like 8 or 9 blue bars in a row. So this is probably one of the better performing leveraged exchange traded funds, way above TQQ, way above several others. And so if you want to study leveraged exchange stocks, this is, if you don't own it, this is a good one to study to see how it.
A quick question. Is there a way to analyze whether it's short covering or whether people are accumulating this? I know because you have like huge gap up, right? It's going from like 50 to 70 in just a couple of days.
And what was the question?
I'm just trying to assess whether if there's a way to analyze whether, because there's such a huge jump in 2 or 3 days, could it be related to short covering, or is it just a lot of people are accumulating the shares?
I personally don't believe it's due to short covering. I don't think a lot of people short SOXL, but I could be wrong. If someone else has an opinion, jump in there. But it's purely it's a 3 times leveraged exchange traded fund, so it's a pure reflection of strong action on the hot tech stocks. I don't have a current list, but formally, sometime back, key holdings were AMD, Avgo, Nvidia, Qualcomm, Micron. My list is a little bit old, so there's probably a more current list out there. But when the high tech companies jump on good news on a 2-week truce on the war, when they go up, this one goes up times 3. And obviously, when they go down, this one goes down times 3. So you have to have solid buy and sell rules, or you don't do so well.
Yeah, Micron was like close to 316 2 weeks back. Now it is 415 or 400 something today. So for sure, Micron is one of the biggest holding in this SOXL. I think it is the top holding, I believe, close to 7%.
So SOXL is a triple H leverage on SOXX.
Yes.
And SOXX is the one that is having the underlying instruments like Micron, Sandisk, and all other stocks in it. SOXL is purely a leveraged instrument on SOXX. So
Yes.
if SOXX moves 1%, SOXL will move 3% because it is 3x leverage. If SOXX moves minus 1%, then SOXL also moves minus 3x. But
Yes.
the way SOXL is constructed, so that's why I always say that before doing leverage, understand how the leverage ETF is constructed inside. What does that mean? Like, does it hold SOXX stock or does it hold SOXX options? Which is what SOXL is. It is using options, and that is how they can give you the leverage of 3x, which means there is an inbuilt decay in the SOXL or every leveraged ETF. And when I say leverage, I am talking about 2x, 3x, 4x, or 1.5x nowadays, or 2.5x, something like that. 1x does not have leverage. So what happens is when, especially in a sideways market or in a sideways movement, your SOXL will drop, even though SOXX may not drop as much. And also the way SOXL is computed is on a daily basis. So that's why if you go back in history and check, SOXX say move 100% in a year, SOXL you'll say, oh, it is 3x, so it should move 300%. No, it doesn't, because these are daily moves. So every day the moves are calculated. So that is why we do not hold XXX leverage for long term. If you hold during the bull move, you benefit from it. But if you hold during the bull move and you also hold during the bear move, then you might not benefit. You might end up in a loss. Versus SOXX might not end up in a loss. So understand the math, understand how it is constructed.
Yep.
And have rules if you want to really benefit from leveraged ETFs.
Yogesh,
Excellent comments.
I want to see one question there. Does it really hold SYXX or does it hold the stock underlying stocks? I believe SYXL is not a holding of SYXX.
It does not hold, I don't believe it holds underlying stock. None of the leverage ETFs holds underlying stocks.
If you take MUU, it is 2x of Micron, right? I thought it is something similar. SYXXL. XL is holding underlying stocks, but not SYXX.
So SOXX is an index.
So yeah, this is Floyd. I think one of the main things for people to keep their mind on is when you buy and sell stocks or a non-leveraged exchange traded fund, having buy and sell rules are obviously very important. If you get on board with a leveraged ETF, you darn well better have solid buy and sell rules, or you
exactly
very easily could lose money.
Agree. Yeah. So this is I think somebody put it there. It shows the top XOXL and SOXL holdings. And you are right in saying that it also depends on options, but it doesn't really depend on the index, I believe.
Okay, maybe it has some of the holdings, but the 3x component comes primarily from options.
Correct. You're right in that. Yeah, sir. For sure.
That's why I said there is a decay inbuilt into the instrument itself, which is not there with the base ETF.
That is correct. Yeah.
And so, Floyd, here, one other suggestion is if you haven't traded leveraged exchange traded funds, you can paper trade or do whatever you want to do. But I would suggest that you do some back testing to get yourself familiar with the price action, the personality, whatever you want to call it, so that when you commit real money, you have at least some level of experience with how the price can move and be prepared to make your buy and sell decisions. That's all I need to say for now. So thank you.
I'm going to share, I'm sure some of you guys are watching the screen. So it's just to validate what everyone's saying about this leverage ETFs are not buy and holds. Let's say in 2020, beginning of 2026, you kind of bought it. Yeah, you're up 40% more. But if we keep on going back in time, things kind of look a little bit different. Now you're up, let's say a little bit, 50% more, 60% more in 24. And then in 23, you're actually only up 20%. Go back to 22, you're up crazy phenomenal because it was a great year. But if you held it at the end of the big bear that happened in 2022, guess what? You're actually only about break even point for about, if you held it for the past almost 5 years, you're pretty much just break even. Actually, if we even go to the past 5 years exactly, it would be, you would be way negative. 200, almost 255% in SOXX, and then you'll be only 65% SOXL. Yes, you still made money, but you had to get really lucky in holding it in that time period. So we have a few more. We were talking about KLAC. Now we're going to do Babcock and Wilcox. So more energy, more equipment. So it provides fossil and renewable power generation and environmental equipment. So let's take a look what's going. Earnings lines is going straight across. Yearly EPS goes everywhere. Sales have been kind of flat except for the last quarter, but year over year wise, as a seasonal company where in the last quarter of the year, they tend to get a little bit more sales. I don't know anything about this company, so take that what you will.
Excuse me, Haley, is there a
Yes.
BWX?
BWX. What is that?
No, B like boy.
Yes, there is. Interest treasury bond?
No, maybe it's BWXT then. Because there's one of those BW companies, I think, that get involved in the very small nuclear power plants that I think this is it. See, it says manufacture power generation systems for US government, because up here in Alaska, they're going to put one of these small nuclear plants, and I think they have one planned for Canada.
Mhm.
And it has a huge future potential of maybe these are self-contained plants that can't go into the meltdown mode, and I think they have like 50 years of material before the nuclear material has to be replaced, and so it's a pretty exciting emerging market. So it might be this one, BWX Technologies. Someone else might know, but I think this is the one that's going to go up here in Alaska at one of the military sites to demonstrate if there isn't a future for the federal government to sort of be self-contained.
I'm asking ChatGPT. So while that's in thinking mode, so nuclear government US, that'll be pretty good. I am a proponent of nuclear if we can somehow control the waste and the cases of Chernobyl and Japan. I forgot which one, Fukushima, I think. So we can control those things that might happen when the destruction is catastrophic, literally catastrophic, because no humans can live there anymore. I think nuclear would be the way to go. But if we look at the daily, the weeklies, there is wow, that volume on the follow through day is pretty significant. Yes, it was a down day. Volume is a little bit greater than I would have liked. And don't you worry, Brian. We are going back to BW.
I didn't know if this one was a spinoff from Babcock and Wilcox, because of Babcock and Wilcox is involved in power generation also. I don't know the answer to that one, but I think it might be a spinoff.
ChatGPT told me, "Oh, what you mean by a physical planet in Alaska means you're trying to say it's going to the moon, right?" I'm like, "No, I'm trying to say a physical power plant construction in Alaska." Oh well, maybe we'll find out. So this one, let's take a look. Yes, earnings is going inside, sales going inside. So Brian, what brought the interest to this stock? Because now Floyd's talked about nuclear power plant generation in Alaska. Is BW doing something? Do you know anything more about the stock? Because I haven't seen it. I can only analyze the technicals. Brian, if you're speaking, you might be still muted. Hey, Alex, you're saying this is for submarine nuclear reactor. Are you talking about BWXT or BW? So BWXT is for submarine nuclear reactor. That's probably why I can't really find the power plant and physical power plant in Alaska, Floyd. We have another stock coming up. BWET. Breakwave tanker ship. What the F?
Incredible performance. 1,000% in the last 9 months. It's up. I bought it yesterday at the open and sold it today at like 30% gain in a day. Yeah, right. I bought it there about 120, sold it bad at about 160. But this thing has just been skyrocketing. And if you go to the weekly, it'll be on a logarithmic scale, and it's still insane even on a logarithmic scale. And I don't understand it. You know, the description is like it invests in crude oil tanker freight futures, but I don't understand how it gets this kind of performance the last 9 months since about July last year when it crossed the 50 and the 200-day with a little sign of slowing down. It says 1,200% in 32 weeks,
That's
which
crazy.
is about not even 9 months. Yeah, it's
No, I just realized I'm technically in the stock market right now. Oh,
big.
it's VCX I'm in. I don't know why it still doesn't show up.
What? You're invested? What?
I'm not, well, I bought it pre-IPO because I was inside the fund and I got a chance to buy some stocks in it. And now I'm up like, yeah, I am invested, Floyd. I don't want to tell anyone. It's my secret. It's my secret thing. It's telling no one. I'm always saying I'm always not invested. I need to bring up on another chart.
Maybe we go back to the market surge beta. I don't
No,
know.
Market Search is not bringing up all the ETFs these days, so I'm using like TradingView more and more. I'm just trying to get better at it. So I'm in VCX, right? I bought it at about $10, right? So I'm up about what 1,115%. But I'm in
What-
lockup because I'm an early investor.
What is VCX?
It's a real estate fund, honestly. So it's a real estate fund that went to AI investing. So they bought like Databricks, Anthropic, all these AI funds, right? And I
Mm.
thought, why not? I like the company. I like to see CEO. I'll throw you some money, right? Well, freaking 3 years later, I'm up like over 1,000%. I'm like, well, that's a nice windfall.
Yeah.
So technically, I am invested, but I did not expect this to become one of those like crazy days where I'm up on a daily basis, 60%, 50%. And when I saw it went up to like $300, I'm like $500. I was like 5,000% in 3 years. That's BS. Of course, I'm in lockup, so I can't sell until September. So
Well, that's called good karma.
I get lucky. It's just sometimes I just go back. I'm like, you guys are IPOing. I just threw you some money. Oh shit, nice. That happens.
Did they not?
What's
Did
up?
they not go up to 500 sometime back?
It did
ACX?
on March 25th. Like I'm not even paying attention because I'm locked up.
Yeah. Loud, yeah.
Like, hey, by September comes, maybe it goes down to like $5 and I lose half my investment. I'm not spending money until it's in the bank. So since we're in
I've
trading,
got a general question about lockup periods. When I haven't experienced it myself, but when people own stock in a company they work for or an investment you have found out about that is doing really well, what mechanism can you use to help lock in some or all of the gains, if any? Is there a mechanism to help protect yourself so that by the lockup period, when that's over, if this thing is down substantially, was there anything you could do to maybe offset a little bit of that?
So when you're talking about something what is showing just now, those companies typically will not have options. So there is nothing you can do. But for employee stock options, when you get, and those are under the lockup period, and you believe that, hey, you know what, I want to capture those gains. And after 3 months or 6 months or 1 year, when those get vested, I don't want to lose that gain if it goes down, then you can certainly trade options based out of that.
Okay. And someone just put it on the chat that says BCX does have options.
interesting.
Then that would be the way to do it. But I don't know if it has liquidity.
Okay.
If it does,
Okay.
then that's great.
Yeah, I understand. Okay. Thank you for that comment.
Yeah, and for employee stock options, most of the times your company would restrict you from trading options on that stock.
Okay.
Yeah, I'm seeing the options in Thinkorswim right now for VCX, just monthly. Yeah.
Might do that then, because it's like, why not? Let me see if I can go to the website and actually what I can do with it. Because I just kind of put it outside outline, which shouldn't be. Don't be me, guys. So
Yeah, liquidity is not big with this one.
it's a meme stock. I don't know. I just got lucky with a meme. So I have worked with some employees because they're selling stock to buy real estate, and how they sell it is through like Hive. So if you're a big enough liquidity market, you can actually buy like stocks from Hive. Sorry, you can sell your stocks on Hive, so you can increase your liquidity. Like they're the top, like they're the first 50 hire of a company, and now they're about a 500-person company, and they're supposedly past like 500 million in valuation. So that's how he sells through Hive or through a few others. I actually recently, okay, this feels like I'm lying all the time now. So I recently found a fund that was getting out of position. They were buying Databricks. Databricks was at, and they're selling it to me at about a 50% discount of the current valuation. So I bought some of their shares in it. So I did buy into Databricks because it was just a cheap deal that seems at the time. So that's what I've been kind of investing in. Is just like those little like random things like VCX or Databricks. It's pre-IPO stuff that I've been actually still buying. Don't shoot me, guys.
Hey, is it almost baby time?
3 weeks, 2-3 weeks. It's getting very close.
Get ready, your life will change.
I'm thinking this is gonna be a stop loss, right? No freaking investing. Not even look at pre-IPOs. Not all the deals that come across my desk. I'm just gonna say, you know what? I just want to sleep. All I want to do is give me some rest. Give me 6 hours. Let's do
Well,
this, Brian. We're both due pretty soon.
hope it
We're
goes
both-
well.
Yes. So far the baby is pretty darn healthy, so I'm quite happy about it.
Wonderful.
There's no too much scares. It's just like the scariest part is get to sleep when you get to sleep. Well, with all these VCX gains, I get to hire a night nanny, and I'm debating 3 nights a week or maybe 6 nights a week. So one thing. So let's take a. So that was a pretty good discussion. So let's go ahead and move on because we do want to hear Yogesh speaking. So I'm hoping people can see this pretty well. So this is leverage ETF, right? I want to show this chart because it's easier to kind of see what's going on. All the green B's are buys. And you can kind of see the fall through day was, all my cursors are synced across the screen, so I can easily look. You can see that about 2 days before the fall through day, 1, 2, there was actually a buy signal. So even with the buy signal, this one I'm clicking right here is TQQQ. And this one I'm clicking right over here is Stoxel. So Floyd did say that, it's like, hey, you could have bought Stoxel and could have gotten that 19%, that 6%. You actually could have gotten it with Floyd's strategy. He does pay attention. He does go onto the group chats. And if you look across the board, this was a little bit earlier than the follow through day. I'm not saying this is a perfect system because if you take a look at all the, let's say I'm going to buy over here, I sold over here, you lost some money. I bought over here. This is the TQQQ. I'm going to sell over here. I lost some money. It was a grind. Can you imagine for like 3-4 months you've been buying and selling?
Yeah.
And it just hurts a little bit. But today, literally to like the last 2-3 days, just this week, you're up 20-30% in your account if you follow the rules of 0 to 100.
Well, and part of the lesson is you can't be asleep at the wheel because these opportunities can. I mean, who knew that Trump was going to give a 2-week stay on whatever it is threatening to do, and so those come out of nowhere, and so you have to sort of be diligent and check your charts. My advice would be, if you want to be active, check your charts maybe every day or even more than every day. I had an iron condor going today on the SPX, and there was some kind of an announcement made this morning, and all of a sudden XPX started going vertical. And on an iron condor, you make money if there's a fairly narrow trading range. And so I saw my chart moving, and I got out as fast as I could with a $300 profit. But if I would have waited 15 more minutes, I would have had maybe a $2,000 loss. And so some of these things you got to know the animal you're trading with, and if you're not going to be able to be around a computer, you're traveling or whatever, then you don't dare touch some of this stuff. You got to know what the requirements are to be successful, and if you want to do a buy and hold, then you don't buy this kind of stuff at all.
Floyd, to your point and Haley's point that, yeah, it looks like I missed these, but it looks like from looking at my own charts there, the buy point with Floyd's strategy for SOXL, for TQQ, for UPRO was all last Friday, right? End of
Yes.
day on the weekly, man. And Floyd
Well,
is totally right.
the market wasn't open Friday, Rick.
Oh, right. So Thursday, end of day Thursday, and with right, who would have known that that Trump would have done that deal?
Yeah.
Sunday or whatever it was, Saturday.
And so one
just
thing to
gotta-
do is you don't, when you see a buy signal, let's say you have $10,000 you want to invest, you don't put $10,000 in on day one. Maybe you put $4,000 on day one.
Yeah.
Get the confirmation, then maybe you put another 4,000 in or 3,000 or whatever, and then if you get a secondary confirmation, then you have your $10,000 invested. And if it's a head fake and it's not a real true buy signal, then maybe you only have 4,000 invested instead of 10, if you know what I mean.
Yeah.
Yep. My first buy signal is usually about a 50% buy of my account portfolio. Then I start going. start going
So-
50,
So,
25.
this is why you want to do back testing and understand the personality of whatever it is you're trading in and get a sense of, for your own personality, your own trading style, what works for you so that can help you be successful. Because what works for anybody you hear talking on our meetup tonight, and if you try to imitate what another person is doing, it may not work so well for you because you have a different risk tolerance, a different set of experiences, a different everything. And so you have to find out, and it takes a while to do this. You have to find out what works for you.
Exactly. Thank you for sharing that, Floyd. So, any questions on this before we move on into the main presentation?
So Haley, you mentioned you're looking at Floyd's process and weekly charts.
Yes. So
past.
this one just so originally it was done by Floyd, but Gary Taylor has taken it over.
That's right.
So that paid trading view version that you see right over here is actually is a custom script developed by Gary Taylor on the foundation of Floyd's trading on TQQ, which he has since expanded to Sock, Fangs, home builders like Nail, and a bunch of others like financials like Bulls. So that's what you see
and
on this chart.
he even has a secondary indicator. And some
Okay.
of the levers ETFs, we use MACD as a secondary indicator. So Gary's got a site, leveragededge.com, and he's got some very, very good training videos to help you be better prepared.
Yep. And Gary is also fantastic. I'm terrible at responding to emails. We joked about this, right? Gary is like, man, I don't think Haley saw that email. I was like, no, I saw it 1 week later and I'm responding to you. I'm just a little have situations going on, like buying pre-IPO stocks. I wish more like prepping for a baby, honestly. But it's definitely readily available. Gary is willing to, he has YouTube videos out. I even give him comments on like, hey, XYZ is like, oh yeah, let me remake that video because I I have to kind of explain that part a little bit more. So Gary's just awesome at responding. So we went through on the stock analysis. We also went through the left trading. I took a screenshot here so people who don't watch the live recording can actually just look at this one. I took it this morning. So it's a little less updated by about 1 trading day. Take a look. I put way too much this time. I was thinking about taking stuff out, but I'm going to the path of losing my mind with a baby coming through. PP, I'm going to give you the Levered Edge website. So main thing that's coming up is that I thought there was going to be a FOMAC meeting. There it is. There's a FOMAC meeting at the end of this month. So April 29th, be on the lookout for interest rates. Yes, CPI is coming out tomorrow. There's a bunch of other things that's coming out, but employment costs, we don't know what's going to happen, but these are way too much. Like CPI matters, employment matters. So I always watch for those news so I don't get surprised. So at this point, I'm going to pause the recording here. So get out your pen and papers. I know some of you guys might be recording with AI note recorders. So I'm going to pause my own personal recording here. So this won't be online, but I'll resume the recording after everything's done to just thank everyone for coming.